Hello and welcome to Angel Insights, brought to you by SyndicateRoom. This is the show where we delve inside the world of angel investing to reveal the tips, tactics and strategies of the world's greatest angel investors. And today is no different, as we welcome the fantastic Alicia Syrett, the founder and CEO of Pantegrion Capital, an angel investment firm that focuses on seed and early stage investments. With over 10 years of experience in the financial industry, Alicia is a member of several angel networks, including Golden Seeds and NY Angels. She presently serves as chairman of the board of directors of He Texted, and is also on the advisory boards of Beauty Booked and Ella. Before starting Pantegrion Capital, Ms. Syrett was the CAO, managing director and very first employee of a multi-billion-dollar private equity firm. She established numerous operational areas there, including payroll, insurance coverage, healthcare, and many, many more. And Alicia is also a frequent speaker on panels for various startup organizations in New York, as well as for entrepreneurship programs at NYU and Columbia. And if that wasn't enough, Alicia is also a recurring panelist on CNBC's Power Pitch. Alicia was voted one of the Wharton's 40 Under 40 Young Alumni and has been featured on Fox, MSNBC, Inc., Associated Press, Huffington Post and USA Today, among others, and she mentors startups and students alike and is a member of Women Corporate Directors. And before we dive into the episode today, I'd love to say a special thank you to Jessica Peltz at KBS Plus Ventures for introducing us to Alicia. But without further ado, ladies and gentlemen, I would like to introduce to you Alicia Syrett, CEO of Pantegrion Capital. Alicia, welcome to Angel Insights. It's an absolute pleasure to have you on the show.
Thanks for having me.
Now, I'd love to start off by hearing, how did you get into investing?
So the long story short is I spent the majority of my career in the financial world, banking, private equity, hedge funds, but my last role had been being the first employee and CEO of what we grew into a multi-billion-dollar firm, but it was a startup in every sense of the word. And it was a lot of fun. It was really crazy. It was drinking from a fire hose, but it was that entrepreneurial experience that really inspired me to stay in the startup world for, the rest of my career. And once that worked out and I invested and took some time to decompress, I decided to get into angel investing because it allowed me to kind of do my own thing, start my own company, and then also help startups and invest in them going forward. So it was a little bit of being an entrepreneur, living that life, and then wanting to extend that experience on as an angel investor.
And having been the first employee at a eventually multi-billion-dollar private equity firm, what were your biggest takeaways from the experience?
Well, I don't think that anything really prepared me for it, and I think if I thought about my big takeaways, that is that there's no book that you can really read that will prepare you to be an entrepreneur. No matter how much you read, the situation is always different. It's specific to whatever you're going through at the time. And so that's what I learned from it, is that you have to be a jack of all trades. You're constantly learning new things. There are challenges all the time that you don't anticipate. And no matter, as an advisor now, no matter what I've been through, it may be similar to what the entrepreneurs are going through, but it's not quite the same. And so everyone's kind of living their own path and dealing with their own set of challenges, no matter how similar they may be to what I went through. And so I think it's just that mentality of just jumping in and going forward and being comfortable with the uncertainty.
And you said that they maintained a startup culture even when you grew to a much bigger firm. How do you think that was possible?
Well, I think that a lot of people struggle with this, actually. I wonder whether it's really possible once you cross certain thresholds, whether it's, 150 employees or so on. I think that you just have to be careful not to get caught up in too much bureaucracy and still have the feeling where every employee is being empowered and new ideas that are generated are respected and there's a forum for them to be heard. I think that that also is possible when you're in an environment of growth, and there's constantly areas where you can brainstorm on new products or new opportunities or new geographies. I think that kind of inherently brings about a lot of brainstorming and that kind of culture. But it's tough. It's really tough.
It is, absolutely, and it's one we often hear, the loss of kind of startup culture when you turn into a corporate. And Angelique Mercurio at Enanol says it's amazing to have you on the advisory board because you think like only an entrepreneur can. So how important is it, do you think, for angels to have an entrepreneurial background?
Well, I think it's helpful. I wouldn't say that it's a must-have, but I would put that up there on the list of one of the very helpful traits. I'm a big proponent of having a pretty diverse advisory board, and I think having someone or multiple people with entrepreneurial backgrounds is probably a crucial part of that equation. But with that said, I think there are other really great backgrounds on advisory boards where they may have not been in the entrepreneurial world, but maybe their strategic influence and connections in very large corporations or depth of industry expertise can also be really helpful. But from my perspective, I mean, I personally feel like I have a great deal of empathy for the entrepreneurs that I work with and the companies that are in my portfolio. And I also share their sense of just persistence and grit, where it's like, we'll figure it out. We'll figure it out. Like, if you're not giving up, I'm not giving up. And so I think that that's something that we definitely share, that kind of mentality.
And you said it's not a must-have. So what are the must-haves, do you think, when investing for the investor?
Oh, in terms of if I'm looking at a company, what
qualities do you think investors must have? We said that an entrepreneurial background isn't essential. So what is essential for investors to either have or to know before investing?
Well, so I think I would answer this in terms of both the diligence that they do and how to be smart about that, and then just maybe how they evaluate a business. So I think part of it is what they need to have pre-investment, and then part of it is how they can be a smart investor post-investment, if that makes sense. So, before I got into angel investing, I just read a ton of research about what the main contributors are to having a great investment, and they really come down to those two things: the diligence that you perform beforehand, and also the time that you spend with the companies afterwards. And so I think the diligence beforehand is a combination of how you evaluate the company, right? Does this business make sense? Is this market large enough? Are they protecting themselves competitively? Do they have, some kind of proprietary edge? What are the milestones they've already hit along the way? Are you comfortable with the team? Have you built a really strong relationship with them to work going forward? Does the business scale? Do you understand their sales and marketing plan? All of those are kind of like the check the box things. And, most importantly, you're really doing the diligence on the entrepreneur. So I think to be a great investor, first of all, you just have to be able to get your arms around all that diligence, to be able to dig in, to understand all of those items and really gain comfort with that. But then I think that the second part, like I mentioned, is really making sure, as a great investor, a lot of investors are passive, they don't necessarily do this, but the second part is really staying involved in the company. When I think about on a daily basis what I do, my portfolio companies are always top of mind for me. I'm scanning like 1,000+ articles a day. If I see things that are of interest to them, I'm sending them along. I'm helping them recruit other advisory board members through my networks of groups that I'm in or alumni connections. I've been able to add advisory board members from companies like IAC or Google to my company boards. I've helped my companies fundraise, in terms of like herding other angel investors to invest alongside me, or leading their rounds, or maybe writing a deal memo for an investment group. I've attended meetings with my entrepreneurs. Maybe they felt like that gave them some credibility or projected a larger team or sense of, corporate vibe. I've introduced them to people who became interns or employees for the company, or people in key operational areas. I've helped them get press and, CNBC or the AP, or helping them get speaking engagements, serving as ref. I mean, I think that, you don't have to do all of those things, but I think if you were to say, well, what's the ideal situation to be a great investor, I think it's just really being able to dig into all of those diligence items, get to know the entrepreneur, really make that long-term commitment to building that relationship and working with them over time. And then after you've made the investment, to stay involved and be able to leverage your network to do anything and everything that you can to help them and just be there. And I don't mean that in terms of a micromanagement way, because I would never have liked that when I was an entrepreneur. But I think that there's this really wonderful cycle of the more information the entrepreneurs share with you, the more you're helpful to them, and then it encourages them to share more information, and that cycle keeps on going. And I think that, if you have that kind of relationship and you're able to help them and do positive things for the business or just kind of help them any way that you can, then it makes the business better, and the whole thing seems to work in the right direction.
And in terms of sharing information from the startup, how often do you like to be communicated with by your investments? Do you like a monthly email?
Well, what the funny thing is we're in touch way more than that. So I've never had to say I want some kind of set formal communication. Now, with that said, some of my companies do that, and I find that helpful because I just love information generally. I just read voraciously, and so it's nice for me to be like, okay, well, did I know everything on this update that they're sending out to all the other investors? Did anything, pique my attention? Sometimes it's great for them to have that discipline of sending something out formally, monthly.
Yeah.
And if there's a way that I can help them, great, if that's more information. But I find personally that usually we're in touch more often than that. And so I'm not a stickler for whether they send that out or not. But, net it's probably really good for them to be disciplined and do that.
I'd love to talk a little about boards now, and you've got experience on a few boards, including New York Angels and He Texted. Mm-hmm. So what are your thoughts on boards at the very early stage? Are they an absolute requirement?
Well, yeah, I mean, I do serve on formal boards. I also serve on a number of advisory boards. I'll say two things on this front. For me personally, I almost prefer being on advisory boards just because I find the relationship to be so much more fluid and we're in touch more often. And, it's not that situation where maybe a lawyer is attending the meetings or someone's taking minutes. So that's just my preference. But with that said, of course, you mentioned I am on other boards too, the more formal ones. And I think that yeah, I mean, for the same reason that I mentioned earlier, it can be helpful for entrepreneurs to send out, let's say it's monthly business updates. Having that kind of disciplined check-in can be very valuable for the entrepreneur. And I, again, having been there once myself, when you're in the thick of it and you're constantly playing defense, sometimes it's hard just to take a step back and force yourself to think about, bigger business goals or strategic initiatives because you just have your hands full and you're just, trying to keep your head above water. But that's important to take the step back and have that kind of thinking and have people who are, really trusted advisors give you feedback and help you on some of the bigger initiatives and help you prioritize. So yeah, I think that boards can be very helpful. I think there's some really good posts out there in the archives from Brad Feld and Fred Wilson and Mark Suster about their recommendations on board meetings. Before we started board meetings with He Texted, we followed a lot of those recommendations on the frequency and how we set them up. And so yeah, I think if you're thoughtful about them beforehand, they can be very valuable to the startup.
And would you suggest that angels then do offer or suggest taking a board seat pre-investment?
I think if they're committed to staying involved in the company and they're really spearheading a lot of initiatives for the company, like all the things that I mentioned earlier, whether it's maybe they're helping the fundraise or they're helping them with strategic introductions and they're that very active angel, that's a nice way to solidify the relationship by joining either the formal board or the advisory board, really whatever the preference is. And I think it's nice to provide that incentive, that extra equity incentive to the angel if they're committing to go above and beyond a passive investor stance. Then it's nice to really make sure that they're tied to the company even more, and they have more skin in the game with respect to, being aligned on the incentives from the equity perspective.
And what do you think founders and investors can do then to make sure that the board meetings are as effective as possible? Often they can be seen as a kind of social waste of time in some cases. So how can you ensure the most productivity from these meetings?
Well, I'm probably a little OCD in this sense, but I'm huge on preparation, and I think that again, the blogs that I reference, they highlight this as making sure that you have an agenda beforehand, distributing that days in advance, making sure that everyone's been able to think about all of the agenda items so that they are already coming to the table with some suggestions. But the biggest takeaway that I would say is, I don't think the board meetings are necessarily just a time for you just to hash through all the history of what's occurred in the last 2 or 3 months. I really think the most fruitful board meetings are ones where you sit down and you've teed up topics for discussion, where it's brainstorming about what can you do to make the business better, or key items that are that the entrepreneurs are struggling with at the moment, and how to get through those. So I think that the best board meetings are the ones where you have the time to prepare, you're attacking really interesting, challenging strategic issues, and you walk away in a very efficient time frame. Let's say it's a couple hours, where there's a commitment from the board members. Here's what I'm going to do to help you, and the entrepreneurs walk away feeling like they've made some really good progress on things that were troubling them. That's the best case scenario, I think.
And you're also a member of some significant angel investment networks, as well as being on the boards of the companies previously mentioned. So how important do you believe networks can be as a source of deal flow for you as an angel?
Oh, I think that they're huge. I mean, the thing that's so tough as an angel is that you can't scale your own time. And so to get a trusted recommendation for an entrepreneur that you should meet with is that just makes your sourcing so much more efficient. And then also, when I'm doing diligence on a potential deal, it's so nice to have a network of angels, experienced angels that I can work with. New York Angels, for example, has just been wonderful in terms of, working together in small groups and learning from each other's expertise. So yeah, I rely on them a lot in terms of, deal flow, in learning from them and their past experience and leading deals together. The company Enernal that you mentioned, I co-led that deal with one of my colleagues in New York Angels, who's also the chairman of Harvard Business Angels. And we both really loved the investment, but from different perspectives. I was coming more from a financial background, and I could see how hedge funds and private equity would love the product. It's essentially energy data. And he was coming more from an information services background, and he loved the product for different reasons. And so that, to me, was really awesome. I just learned a lot from him, and I think vice versa. And I think it was a very symbiotic working relationship for us to lead the deal together. So I absolutely love the networks from that perspective.
And would you have any advice for someone looking to join a network, or already in a network and looking to maximize their use of it?
Yeah, so if someone's looking to join a network, I would just say go for it, because there's really little downside. What's the worst case scenario? You lose, the dues that you paid, and you don't ever wind up attending a meeting. That's not a bad worst case scenario. There's so much to learn from it, whether they're informational meetings that they hold on how to be a better angel, or, learning from other people when you conduct diligence, and going to meetings where, they've teed up 10 or 12 companies to present at one time. That's highly efficient, right? Curated it for you, and then you're spending a very efficient amount of time seeing these companies and working with people. So I would say, definitely go for it. There's tons of networks out there. Figuring out which one is the right fit is relatively easy to do too, because you can attend informational meetings at a lot of these groups as a guest before you ever have to commit. So yeah, I highly recommend it. And then as far as how you maximize it when you're in the network, I would say, like anything, it's kind of what you get out of it is what you put into it. So making sure that you attend the meetings regularly and volunteering on committees or side projects, leading deals, and, just spearheading initiatives, whether it's a sector that you're really interested in, doing subgroups on that, or bringing in a speaker, being proactive about being a thought leader or organizing events. Like, I think the more you put into it in terms of your time, the more you get out of it and become recognized.
And if it's okay with you, we're going to dive into a quick fire round now.
Okay, go for it.
So, the biggest misconception about early stage investing?
I think the biggest misconception is that it's really easy to have someone write a check for you. And I'm not saying that it's not. I mean, I'm sure there are people out there that sit down to meet an entrepreneur for coffee and at the end of the meeting they write them a check. But the vast majority of times that just doesn't happen that way. And so what really matters is the entrepreneur taking the time to do the diligence on which investor is right for them, understanding where that investor invests, both in terms of geography and sector and valuation, and making sure that they follow them, get to know them, and then get a warm introduction. Really making sure that the entrepreneur puts the research into figuring out all of those things before they make the approach.
And then your investing ethos in a sentence.
So my mantra generally is your dollar and your actions are your votes. So I feel like any investment decision I make is somehow reflective of what I believe in too. And specifically what I mean by that is, I could invest in a food company that's pioneering transparency in the supply chain, and it's probably because I, fundamentally believe in transparency and how we really should know what's going into our bodies, right? So everything I think I've invested in, it's because I believe in the person, and also because there's some kind of fundamental theme that reflects my values.
And then finish this sentence. If I had more time, I would do X more because X.
If I had more time, I would probably I would probably speak more in the community, because it enables me to help to give back to the ecosystem, and also to meet a lot of people at once, especially when I'm crunched for time.
And then your favourite investing or technology-related resource? It could be a podcast, a blog, a newsletter.
I think I mentioned this earlier. I use FeedReader to scan articles, every article that's put out every day from like 20 different publications. And so just by looking at 1,000+ articles a day, I probably read, maybe 20 to 30. And so many of them are important for my portfolio companies, whether it's like a new fund that was being launched or competitor activity, or, something that I see where maybe that could be a press lead for them, like that. Just staying on top of what's going on in the environment, that's probably my biggest resource.
And then your most recent investment and why you said yes.
So I made an investment earlier this year in iFunding, which is a real estate crowdfunding platform. And then I've also made a couple of real estate investments through the platform just in the last couple of weeks. And then we'll do another one tomorrow. So that's been kind of a fruitful investment for me, both in terms of investing in their equity, but then also now in investing in their deals and tinkering around with that. Why I said yes is I love the team. I actually wound up meeting them through my work on CNBC and doing the diligence through that, and so becoming very comfortable with them. But I, definitely believe that there's a huge opportunity in curating these investment deals for accredited investors, and these investors can make a lot of money doing it. But the concept of crowdfunding, I think, is of course a huge investment theme, and just was really drawn to it.
Well, Alicia, thank you so much for joining us on this very special episode of Angel Insights. I'm hugely grateful.
Thank you for having me.
And we would love to say a huge thank you to Alicia for giving up her time to be on the show today. And we would love to hear what you thought of this episode of Angel Insights. And you can tweet us at SyndicateRoom on Twitter. And likewise, we would be delighted if you would share the show with your friends on social media. And before we leave the show today, we'd like to remind you that early stage investing is risky, and so it's important to remember that you shouldn't invest more than you can afford to lose, and you should really carry out the proper due diligence prior to making the investment. Thank you so much, as always, for your continued support, and we look so forward to seeing you in the next episode, where we'll be interviewing Ben Luntz of Indicator Ventures.